Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we've been doing these free mentoring roundtables since the fall of 2008. It actually predates the 1 million by 1 million program. It was this experiment of online mentoring that led us to founding 1 million by 1 million eventually in 2010. Even that has been 11 years now. So we've done 523 of these free roundtables. Over 150,000 people have participated. And of course, we use the same format of online mentoring in our premium program. So we do a lot of roundtables. Every week we do, many of these mentoring sessions, and it works really well. We have had the privilege of working with entrepreneurs all around the world. When we started, we were quickly adopted in the US and in India. But today, we are seeing entrepreneurs coming all the way from Africa, Latin America, remote places, not just the, major metros of India, but the remote places of India, Nepal, etc. And of course, Europe has always been a factor. So it's been a fascinating, absolutely fascinating journey of building this platform. Every single recording of our roundtables are available on our YouTube channel, so you can find everything at 1M1M Roundtable. Today's hashtag for Twitter is 1M1M, and we are at 1M by 1M, and at Romana, we publish a lot of interesting content on Twitter. Now, this is a roundtable, not a broadcast. We do have scheduled programming first, and then we're going to open up the line for Q&A. We do want you to participate as much as you would like to. Unfortunately, we have a time constraint today, so we are not going to do any entrepreneur pitch. I will try to cover a short Q&A, but really our focus today is going to be on our first piece of scheduled programming. Let me welcome Tim Guleri from Sierra Ventures. I've known Tim for a very long time, and I'm a big fan of Sierra Ventures and all the work that the firm does. And I have a very personal debt to Sierra Ventures, which I will tell you about in a moment. But welcome, Tim. Thank you for coming.
Sarmana, thanks for the invite, and it's so nice to see you again, and certainly in these COVID-infused times, great to see your smiling face this morning.
So Tim, I have to tell you a story before we go on. You probably know my husband, Dominique Trumpon, because Sierra funded Canisa, the company that he ran.
Yes.
Now, Dave Schwab was on his board. And in 2001, Dominique was running Canisa, and I think Dominique and Dave were talking, and Dominique had this idea of a business model within Canisa, which was going to be in some, tangential direction. So Dominique was chatting with Dave, and Dave said, "Oh, why don't you call Romana and she can work it out?" So that was the first time I met Dominique through Dave. And then we did this project, and then I went off, and 2 years later, we reconnected professionally, and then we've been together ever since. It's been 17 years.
It's such a great story. This is like truly venture capital value add in all dimensions. But this is great. I had no idea.
So anyway, let's catch up on what's going on at Sierra. What are you doing with the firm, and what is the current investment thesis, and so forth?
No, Romana, so thanks for that lovely memory. That's great, and say a warm hello to Dominique. But Sierra, as you rightly pointed out, is a early stage venture capital firm. We have this is our 39th year in operation. and we are singularly focused on early stage B2B and deep tech. So we don't do consumer-oriented companies. We are deep in the sector, and we think we specialize and we can really add value in the early stage of venture investing. We are Sarmana investing our 12th fund now, which was raised right as COVID hit, so March of 2020. And we are really looking for elite entrepreneurs, that have a bold vision, and they want to build lasting companies. So we don't care where in the world you are, where you start. We want to be the bridge to the US and certainly to the Silicon Valley ecosystem, and work closely with these founders to really reimagine and build a lasting company or lasting enterprise. So I've been at Sierra since 2002, so nearly coming on 20 years. And we just love what we do in the early stage of the business building journey. But that's a bit about Sierra.
So Tim, let's double click down on a bunch of different things you said there.
Yeah.
Firstly, early stage. Tell me, what is your definition of early stage? What points do you like to come into a B2B deal? What do you like to see by way of proof points, or what kind of, what is your entry point usually?
Yeah. So, Sarmana, obviously, if you'd asked me this question every 5 years since I've been at Sierra, the answer would be slightly different because the market, keeps evolving and keeps shifting. Today, because of the fact that you can actually build and scale a company with very few dollars relative to 20 years ago, we are seeing some pretty innovative work being done by early entrepreneurs, in kind of the early part of their life as a company. So we've likewise become very flexible as a early stage fund in what the entrepreneur needs. So we actually fit the dollar check that we write to the need of the company. So we've actually flipped it around, and we do pre-seeds, which definitionally would be less than $1 million, believe it or not, into a company. We do seeds, and jokingly what are called fat seeds, which are kind of $2 to $4 million in size, and obviously Series A's, which are the definition of even that is changing now, but let's call it $6 to $7 million as an initial check. So I think the big takeaway would be that very flexible in the check size. It really comes to how many, what are the milestones that the company's at today, and where are the milestones going to look like in 18 months, and then underwrite that journey.
And what would you then invest in concepts? When you say pre-seed $1 million, are you investing in concepts?
Yes, we do, and we have. The bar for the experience of the team in that particular pain point that they're going after is extremely high for those kind of investment bets, because clearly you're betting on the future based on the experience the team might have had. But the short answer is yes, we have done those, as even in the last year.
So Tim, the theme that I'm hearing from everyone who is willing to do, concept stage investing is basically twofold. One is either the team has done it before and knows what they're doing, and the investor knows the team. And secondly, sometimes if it's a extraordinary level of domain knowledge in a first-time entrepreneur team, that's also a scenario in which people are considering concept stage investing. Are those criteria for you, or is there anything else that you also consider?
I think there are really two ways I look at it, Sarmana. One is obviously the first bucket is that it's a team that's got a deep domain, knowledge in a particular space that we know, and they might have done it inside a very interesting company. A great example of that is a company I did a seed investment in called Sadai. This team of three people had built application monitoring infrastructure inside of PayPal, which runs PayPal's core infrastructure today in an autonomous way. And our view was that the world needs this and they need to see this built externally. So when that team came out, we funded them because, the idea was this is not theory. They're already doing it at PayPal. They
Right.
can certainly do it for the rest of the world. So that's one example. I think the other is what I'll call business model innovation. So this would be a team that has experienced something prior, but they're hitting a problem in today's market with a very different go-to-market orientation. And we've seen innovations in that's modality as well. So those would be the two ways we look at the 2x2 of pre-revenue or pre-traction investments that we do.
Yeah. Now, talk to me a bit about the innovation that you are most interested in. There is business model innovation, there is technology innovation, there is process innovation. This application monitoring that you talked about probably is more of a process innovation than a very deep technology innovation, and powered by deep domain knowledge. The one that I sent you recently is a sales process innovation, right? Sales ops innovation.
Yeah.
How do you weigh the different kinds of innovation, the defensibility of the deals in those kinds of innovations?
Yeah. So I think the answer will probably surprise you, and I actually think that the business model innovation is actually the most important fundamental moat that one needs to think about as an early stage, as an entrepreneur, because technical innovation is a great to have, right? But if you think about companies that get to 100, 200, $300 million in ARR, the ones that have business model innovation fundamentally are the ones that can survive the arc of competition and markets shifting, et cetera. So what I tend to do, Sramana, is actually if I can get a company that has a deep technical moat, I will take that, which was the case in Sadai. And when we are working with them, we begin to put the foundation for business model innovation and what I'll call distribution innovation. That how do you get the product out to market in a way that makes us a very efficient company, right? So when I invest, if I have a deep domain technical moat, I'll try to help the entrepreneur build or start putting the foundations of business model or distribution innovation, right? If I can find an early stage company that already has distribution innovation, I love those because those are actually harder to do, believe it or not, than technical innovations. So I'm a big believer, having I've had the pleasure of writing a first check into a company and taking them public. So kind of that end-to-end journey. When you look at a company from a public markets lens, the distribution innovation is actually the one that trumps the technical innovation.
So very interesting perspective. Let's actually do a few case studies. You have obviously developed a very informed perspective on this. So walk us through maybe a couple of examples, what they came to you with, what you saw, what was the business model and distribution innovation that made them successful?
Yeah. So, Sramana, probably the easiest, example to give you, which I think your audience will understand, is, companies that have a open source you know, genesis, right?
Yeah.
So I invested in a company, actually one of my second investment at Sierra called SourceFire, and this company
Yeah.
was based in Washington D.C. in the security space. So they built firewalls and these products called intrusion detection prevention. So you know if there's bad stuff flying through your network, they could detect that. And the company was founded by this phenomenal entrepreneur called Marty Roche. And Marty had written this piece of open source software called Snort,
Mm.
SNORT. And you know it's a word play on sniffer, which is how you sniff traffic and see if there's any bad stuff in it. So this little open source project had taken a life of its own, and when we invested, they were had about 2 million downloads, and they were getting enterprise traction at the time, and we wrote our $3 million check, and I think the company was at six pre, approximately nine post. We were the first. My partner Mark Fernandez and I jumped on a plane to give him a term sheet. We were so excited when we met Marty at the RSA show. And the interesting, so that company, obviously, we hired a sales team, and we really nourished the open source project, right? And we really built the community. We had a whole part of the company that just did community marketing, right?
Mm-hmm.
And I still remember, Sramana, when we were having the board meeting right before going public.
Yeah.
Uh, and this company ultimately, after going public, got bought by Cisco Systems for about 2.4 billion. But
Mm-hmm.
at that board meeting, when the CEO was doing his quarterly review, there were only four companies or deals in that quarter that were above 500K in size, right? A plethora of the deals, even then when we were about to go public, were in the 50 to $70,000 range. So just the power of distribution, the fact that
Yeah.
source was, really customers were experiencing the product using open source and then buying it. So that's a great example
Very
of
powerful model. Yeah.
sustained its arc of growth, and ultimately Cisco, which is probably a good prototype of a closed source company, saw the value of distribution and ended up paying a really good multiple for SourceFire.
Have you done other deals in that mode?
Yes, I have. In fact, a really interesting company out of Cincinnati is a company called Astronomer, and they are based on open source project called Airflow. And
Mm-hmm.
they're building, think of it as a next generation MuleSoft. So in
Mm-hmm.
the data pipeline space, so pipelines as a service, as you know, that polyglot data infrastructures that run on the cloud and run on-prem are becoming the mainstay of the computing backbone today. And connecting these databases and applications is very, very tough at scale. So Astronomer is going after that market opportunity. And it was the exact same mode. Sramana, I did the series Seed and backed an entrepreneur I'd worked with before. His name is Joe Otto out of Cincinnati. So again, not a popular venture destination, but we loved
Great.
it. This entrepreneur was in St. Louis. Raya Walker, who's the founder, partnered with Joe. And we were lucky enough to help them get to start building the enterprise version of the product, and the companies raised a couple of rounds and really, really being really successful right off the gate. Two in the business, but we've got big prospects for them.
Super. Tim, I'm actually thinking about some of the work that we are doing right now around SaaS, which is also a distribution innovation. I mean, one of the reasons Salesforce has been as successful as it has been is because it managed to not only do a SaaS product, but it also did this whole SaaS strategy very early on. And and got huge traction on that and built great companies on top of their past platforms like
Yes.
platform like the Vivas and the Velocities and the Apps
Yes.
and the blah, blah, blah. So I'm actually very curious to hear what you are seeing in your orbit of other companies pursuing this strategy.
Yeah, I think this actually connects nicely, Sramana, with the earlier point I made, which is how companies can get out of the gate really fast without raising too much of capital and get product market fit. And I think that's the reason that platform as a service or PaaS is very popular, because you can assume that that infrastructure is in place for you to build your application on,
Yeah.
right? And those services are world class. They scale globally, and you can just build and go. And a great example of that actually is a couple of entrepreneurs I backed from Tokyo, Japan, a company called Treasure Data, which built a marketing customer data platform, or CDP. And these were first-time entrepreneurs. Again, classic Sierra. We wrote the first check-in, but they built effectively a data warehouse. So this is think of it in a way, the prior generation to what Snowflake is doing today, but targeting at the marketing segment. And the company was able to innovate so quickly because they were using the object store S3 architecture that Salesforce had, what AWS had, and a variety of other services. And they got to $40 million in ARR when they got approached and purchased by SoftBank a few years ago for 600 mil. But that's a great example of innovating above what the past platforms provide. And I feel that any entrepreneur that is in the market today should be taking advantage of GCP or Azure or Amazon, and certainly others that are like Salesforce that you pointed out.
Yeah, and there's some other, Salesforce of course is the classic, but we are talking to a bunch of different interesting companies that have both marketplaces, API strategies, and making their infrastructures available. Snowflake is a very interesting one. Actually, there are a lot of companies building on top of Snowflake right now. We are talking to Snowflake, and Atlassian has built a fabulous marketplace
Yes.
and lots of apps, and they're acquiring from their marketplace. I spoke with a company called PagerDuty. It's a public company in the real-time alert space. They have done about 500 integrations, and they're looking to build a large-scale PaaS ecosystem. And so if you're in this real-time alert kind of mode of application, that's an interesting stack to integrate with and leverage in building whatever it is that you're trying to build. So there's, I think, very interesting stuff going on from some of the larger players who are opening up their ecosystems, their APIs, and their platforms. Now, have you seen companies that are coming up that are going to be PaaS themselves? Like, for example, I feel that AI is ripe for a PaaS strategy, a PaaS platform strategy. Like if you look at C3 AI, they're going after enterprises, but there's no equivalent of C3 AI on which 100 or 100,000 startups can build AI apps. What is your analysis of that?
Yeah, I think Sramana, I think and never say never, but I think it would be hard for an entrepreneur, without deep, capital access to capital to build do a sort of a purpose-built PaaS, for the same reason that you need to invest a lot of money in ensuring all the lower layer of services are in place, and these are very expensive data centers, and obviously infrastructure has to be scalable. I feel that to have a brand new platform that would compete with the, let's call them the big three or the big four. IBM's made a recent set of public noise that they're gonna come back into this market. Would be hard. That's point number one, because it just takes too much capital. The second would be, I think, data. So for AI to succeed in any domain, whether you're building a horizontal AI platform or bespoke AI for a particular application set, you need to have a lot of data to really train these models. And data tends to collect in these massive PaaS platforms. So if you have a view that data is necessary at scale to train any kind of AI that you're putting into the market, it again brings you back to the big three or the big four. So look, I know the folks at C3 really well. Tom Siebel was, in the CRM space when I was in the CRM space. They've actually scaled the business on the backs of very large government contracts and building, sort of verticalized, AI applications, and starting the, those kind of industries that are regulated somewhat. So I think that he was able to do it in a very different way because he's Tom Siebel and he's got, reach into the market. But I think for your, normal kind of early stage entrepreneur, that sales motion is quite difficult in my opinion, and data is the second point. So I feel that a dedicated AI SaaS or PaaS is probably hard, but building an AI-powered application or infrastructure is easy if you use one of the four that are available.
Right. So, I've kind of thought about it similar to you because of the capital issue. And as you know, we emphasize bootstrapping a lot. So you can't really do a PaaS company with all the entire stack being built on a bootstrap strategy. So that's a no-go. But the Salesforce.com strategy of building a vertical app or some kind of an app that is targeting a specific market,
yes,
to build the business up to a point,
yes,
and then opening up the platform, and this could still be on top of AWS, but then there are many layers on top of AWS where you put in the AI layer, the data layer, etc., maybe Snowflake, etc. But I think once you are in the market and you have already gained some amount of critical mass, then you can start playing the platform game to get into other markets.
Yeah, that I absolutely agree with. And there are two great examples of that. So an app that then became a PaaS, and a PaaS then that became an app. So the example of the first one is obviously Salesforce, where they started with CRM and then they opened up their PaaS for general consumption, and great companies like Viva and Velocity have come out of that. The other example on the other side is Twilio, which started as effectively a dial tone PaaS, and now they're entering the application market. As you know, they're coming at the IVR, CCaaS market, which is contact center in the cloud. So they're going the other direction. So both are possible, and both have been done very successfully. Yeah,
Twilio is doing a very interesting job with this. With business model innovation. I follow them closely. There's a very, very interestingly played hand.
Yes, yes.
So, Tim, switching gears a little bit, you've talked quite a bit about your quite a diverse hinterland from which you're drawing your deals. Talk a little bit about how you find them or how they find you. Japan, Cincinnati, St. Louis, Washington, how is this happening?
Yeah, so I think there are a couple of things, Sramana. So one is we've got a very clear positioning in the venture ecosystem as a firm. And we have not wavered over the last 40 years. And we are principally serving early stage and B2B. And with that clarity of mission, comes a sort of clear positioning in the market, and entrepreneurs when they search or Google or talk to their colleagues, they get a pretty small cluster of firms that are in this cohort, and we tend to get a large amount of inbound because of that. That's point number one. Second is we are a very hungry partnership, and we have a very large network of friends in the ecosystem, boomerang entrepreneurs. We have a young team of investors that are very active in the ecosystem by market. So, for instance, we have a person that is dedicated to the Midwest region to reach out to B2B entrepreneurs that are innovating there. We have somebody covering Canada. We've got somebody covering Israel. So the way those guys work is they will partner with the local venture firms, make sure they know us, and we know them vice versa. So there's a bit of a ground game that is there. And the last thing I'd say is we've got 80-person strong CIO council or CIO network, and these 80 CIOs are the ones that are consuming services from these early stage companies. And when they see a really interesting one, they send us that deal flow. I was just yesterday on the phone with the head of cloud at Fidelity, who is one of our good friends, and we were talking about what are you seeing in the market, and he just rattled off 3 names of companies he find very innovative, and did the introduction. So I think those are the 3 predominant ways in which entrepreneurs get connected with Sierra.
Yeah. And what are the trends? How do you synthesize what you see out there right now by way of deal flow, teams that are emerging, and also what you would like to invest in based on those teams?
Yeah, I think so. A couple of points there. I think one is, Sarmana, so if you just take a step back, so we do what I'll call classic, infrastructure investing. So obviously cloud, data, security, and from a business model standpoint, there's software as a service or transactional based business model. So that's the regular gamut. Then on the deep tech side, we've done some very interesting companies in vision. So this is AI innovation using cameras and how that applies to different vertical problems. So that we find that very interesting. We've done some blockchain investing, which is, again, blockchain infrastructure. That's of great interest to us. And vertical SaaS. So we think that there's going to be a lot of innovation at the application layer as entrepreneurs, build certain verticals. And so I think those are some of the broader kind of clusters in which we are seeing great companies. So that's one. The second is, from a trend standpoint, very, very strong trend in developer-led go-to-markets. So the developers are this distribution channel, right? And I think we're seeing a very dominant sort of innovation in that stream. The second is API-led. So effectively headless infrastructure where there's an API go-to model, and there's obviously a connect between developer-led and API-led, because APIs are consumed by developers. But that API-led market is actually quite interesting, and it's booming in different verticals and also on the horizontal part of the stack. So it's exciting. And the third bubble, I'd say, is it's the third coming of open source. The first coming was when I did SourceFire, that in the early 2000s. The second was after, kind of the 2008. This is when, great companies were invested into, some of which you see in the market today at scale. And I think around Kubernetes and that entire, new ecosystem, I think we're seeing third coming of open source. So that would be the third trend.
Hmm. You know, we've talked to quite a few companies that are doing this API-led SaaS strategy, and I think that will produce a lot of interesting companies. I was talking to Unbabel. I don't know if you've seen this company. It's
No.
a AI translation technology, CMU, a team out of CMU, computer scientists, and Portuguese, actually.
Mm-hmm.
And they are doing, I think, 60% of their business is on Zendesk. So they are, talking to Zendesk through an API and running their technology on top of Zendesk. And also, I think Zendesk Marketplace is working. So they get a lot of leads out of Zendesk. And I'm hearing this quite often, is that where there is an API call with a company that has a substantial customer base, a lot of leads are coming from those companies because they want to intensify their exit barriers by integrating with other apps and so forth. So this is a very interesting emerging trend.
Yes, definitely.
All right, well, we could go on and on, but I need to close up today. We will continue later.
All right, Sharmana, thank you again for the invite, and a quick call out to all the entrepreneurs that are looking at this great format and podcast. If there's any interest to connect with us, you can do so directly. We're all on Twitter and LinkedIn, and through Sharmana as well. So thank you again for giving me the opportunity.
Bye, Tim.
All right, bye.
Folks, we can do a quick wrap up Q&A if anybody has anything that you want to discuss quickly. But I will need to close up the session today a bit earlier than usual. And we're not going to be able to do the entrepreneur session. So anybody, questions, comments, quickly? If not, I'm going to adjourn, and we will meet you back here next week so you can bring your questions and stuff to the next session. And also you can reserve your slot to pitch at the next session as well, and we will do an entrepreneur mentoring session next time. Okay. Be well, make lots of progress. We'll see you next week. Bye.